Welcome to our episode of Talent in Lending Tech. This is our podcast called Tilt, and I am with Bill Killmer today. He is the president of the Mortgage Action Alliance and lots of lobbyist activities. Why don't you tell us a little bit about yourself?
What's in the title, Mark? And number one, thanks, and really pleased to be on the podcast with you today. My actual title is SVP, or Staff Vice President for Legislative and Political Affairs, MBA, and under that, to your point, we have our grassroots affiliate, the Mortgage Action Alliance, and our Political Action Committee, PAC for the Mortgage Bankers Association, and for the entire real estate finance industry. But the team I lead at MBA is really focused on Capitol Hill and advocating for policies either on offense or defense on behalf of mortgage bankers throughout the country. And we work hand in glove with regulatory policy subject matter experts at MBA, our research and economics team, and our public affairs team to try to put the best message and use the best data and the best arguments on behalf of the industry and, frankly, customers and consumers, whether those are homeowners or renters that our members of the MBA serve. So it's our job to help MBA put its best foot forward on Capitol Hill. And we're here today in the Capitol Hill townhouse that MBA rents so that we have our footprint right here. You can see the Capitol if you walk out on the street, as you saw driving up here. We're just a couple of blocks away from the Capitol on the Senate side of Capitol Hill here in DC. So it's really our beachhead on behalf of the industry here in the nation's capital.
Well, the MBA and the industry certainly appreciates all of the hard work that you and your team do. It's a lot of unsung hero type of work that doesn't get very flashy, but it's so necessary to help all the stakeholders in this industry, from consumers to the lenders that help keep it going, and certainly a lot of challenges. My name is Mark Cunningham. I'm with Trained AI, and happy to be here today. So we'll talk a little bit about the challenges maybe that you see coming up in policy that could affect the industry and hot topics today that are coming out. What is your take on that?
There's so many, both at the state and local level, and certainly here centered out of Washington, D.C. and the federal government, generating those challenges and opportunities that it's a long list. And I had to write some of them down. But I'd say for the industry, the infrastructure of the housing GSEs, the framework there for providing liquidity and mortgage availability through Fannie Mae and Freddie Mac is kind of always top of mind for us in terms of issues that we're working on. There's been a lot of conversation with the current Trump administration when they came into office. And literally, it hasn't yet been a year. It seems longer because of the pace that they've been operating on. But there's been a lot of conversation about the potential for releasing the GSEs from the current state of conservatorship. They became wards of the state 17 years ago in 2008 as part of that whole great financial recession where the housing bubble burst. And lending certainly was impacted by that in a way that all of the industry will remember. And having them go back to their status as privately held entities that have a charter from the Congress and are government-sponsored enterprises that have those advantages to maintain liquidity and availability in the secondary mortgage market, it's really critically important. If you're going to tinker with that, you got to make sure that you get it right, because we're talking about a $9 trillion mortgage market. Yeah. So there's been a lot of conversation about whether this administration would embark with the Congress on trying to release the GSEs. That's probably something that's going to happen next year or maybe even the year after that, but a lot of groundwork's being laid on that. Inside the GSE realm, for pricing, just the providers, FICO and now Vantage Score, but the credit bureau, their part in the mortgage ecosystem, the pricing of that gets passed along to consumers really increased over the last 4 years, and we're on the cusp of a 40% price hike. And obviously that involves resellers and the others that are part of that chain, and no one's saying that we don't need to be safe and sound in how we qualify when they're applying for a mortgage, but the cost has gone up dramatically, and we think there needs to be more competition in the credit score space, and that all of those that are in the ecosystem really need to be examined. And that falls under the purview of the regulator of Fannie and Freddie, the Federal Housing Finance Agency. So we've been talking a lot with the director of that agency and others there and members of Congress about the steps that can be taken very aggressively to those increased costs at a time when housing affordability is such a great challenge in every market throughout the country. This is a step if you can find a way to reduce cost and a tri-merge report, the three credit bureaus, and having credit pulled with all three of those reports being part of that process. Is there a way to the number? There's discussion in the last administration about going to a bi-merge or two-report process. We think that studying the efficacy of a single score makes a lot of sense too, and that's true in a lot of other asset classes like lending and other consumer finance channels too. So that's probably issue 1A after the GSEs. And then you get into some other component parts. Congress has been working on what they've called a road to housing package, which would be a combination of a lot of smaller incremental reforms to try to tackle the issue of housing affordability. And much of that is carrot and sticks from the federal government and HUD to try to encourage state and localities to more pro-housing reforms. Also conditioning grant money so that it's utilized for the purpose of increased housing supply. And there's some other reforms in there, both on the FHA program, the Rural Housing Service program, some of concern, reforms that have been contemplated. There's a thought that might get resolved before the end of this year. Now it looks like the House is going to debate the package further, and that more of a first quarter of next year type issue. But terrorism risk insurance, which is a huge issue for our commercial multifamily members, needs to be reauthorized by the end of 2027, and we're hoping that gets done at some point in 2026 so that there's continuity for those insurance policies that need to be in place, particularly in the commercial real estate. So those are just a few things. I didn't even talk about the CFPB, other rules, whether it's RESPA reforms or loan officer compensation, that we would hope the Bureau could tackle. But funding for the Bureau and the attitude the Trump administration's taken about the Bureau has regulated or practiced its enforcement previously has caused them to kind of pause button on the Bureau's activities. And that's another big challenge where we're pretty focused on that as well.
Yeah, those are great insights. A couple comments. I belong to the Exchequer Club, which they actually had some great regulators that were just kind of facts just about the conservatorship and that potentially notion, they didn't say this, but there's notion that maybe it has to be taken down in bite-sized amounts because it's such a large, even for the public markets, it'd be the largest public IPO ever if we went back to that.
Yeah, it's an interesting question, Mark, and I know the presentation you're talking about. My boss, NBA CEO Bob Brookschmidt, was deeply involved in that presentation.
It was fascinating.
And really tracks. There's talk about a secondary public offering. A lot of people refer to it as an IPO, but you buy shares of Fannie and Freddie today. But there's talk about an examination of their value and finding ways for the public after these many years of conservatorship to realize some of that value. That's fine if you want that kind of capital markets transaction, and we're not opposed to that, but that shouldn't take the focus off taking the GSEs out of conservatorship. Maybe that's a first step before you walk down the other path, which will be lengthier. And that involves how you unwind a stake that the federal government and the Treasury Department took in both of the GSEs, and how you're going to move forward without that government. The explicit backstop that they provided in this interim period here, and how you would move forward after that.
Yeah, it's kind of a build tech product, and you want to build a proof of concept, if you will, so you have a backstop, right? So take down the whole thing in one instance. There might be unforeseen.
Yeah, you don't want to put the 30-year mortgage at risk. I've got a mortgage finance system in the U.S. that, despite the hiccups, the Great Recession, and the need for conservatorship, is still the envy of the world. And affordability is a challenge, but having the finance product there that so many in the industry are the ones who help as a conduit to provide the American dream, making housing choices and renting until they're ready to buy, but then sustainable home ownership is becoming less obtainable for many Americans, and certainly the younger generation is questioning how much longer it may be taking them. So you want to make sure you get that system propped back into place sustainably and that you do it the right way.
Yeah, no, that's awesome. Well, thank you for that detail on that. So since you're in the center of all the policy and legislative, how do you potentially see some of these legislative updates and amendments coming to enable technology? Because obviously everybody, AI has become a marketing term. To me, it still comes down to what is need to have and what actually gives lenders, people lift in the industry. But for example, you can totally take the bias out of some of the decisions, maybe even around credit, right? And it's not a personal thing from anybody that's trying to run their business or be profitable, but at the same time, we want it to be equitable. So what might be opportunities around legislative opening up?
Yeah.
We do have an administration that is at least wants to be tech mindful and has an interest in tech. How do you potentially?
Yeah, no, you've got to marry that with this administration's interest in housing and housing
Right.
affordability as well. And I think so much of what you do as a lobbyist, which I define lobbying as more of an art than a science, but it's undergirded by science, not just in the tech space, but write data to help make your case, like I was mentioning, that and informing policymakers, whether they're inside the executive branch or whether they're in state houses or state legislatures and not just the U.S. Congress. A lot of these issues with respect to AI are being thrashed around and worked on at the state by state level. And there's a lot of conversation about federal government setting the right kind of template for the regulation of AI. And so much of what people fear is AI, but the education component comes with, or for the first time, familiarizing policymakers with how many years and for how long AI has been part of the underwriting process already, and that people are essential to that. AI is part of the toolkit that helps automate that process and make it run more smoothly for the end user, for the consumer. People have to be there to control the utilization. So we're not talking about taking people out of the process, even while we can explore the opportunities to eliminate towards a greater of automation. So we want to make sure that in the various state and local laboratories where people are talking about regulating the use of AI, that nothing's done that would tie the hands of the way that AI is already used in the mortgage industry. And then in debates about how you would regulate that and how the U.S. hopefully will not lag behind some of the other major economies that have been ahead of us in terms of setting up frameworks for the regulation of AI, particularly the government's focused on its application of national security and healthcare. It's a debate around how you utilize AI appropriately in that space. We want to make sure in mortgage that there's a deep enough understanding that in taking steps to try to put in guardrails, you're not going to hamper some of the processes that are already in place. MBA has done some interesting white papers that you can find on our website that are real guidebooks that we want to utilize. But I just have to say, I can't tell you exactly what the other challenges or opportunities are going to be in the IT space. It's such a defining issue for the industry, and the change is so hard to recognize in front of us because it's moving so rapidly. The comparative advantage of how members of the industry are utilizing technology against how some of their peers has really become kind of a differentiator. So we're not sure exactly what those challenges are, but the use of technology is really going to be probably what leads to the most change in the industry over the next decade or two.
The opportunities, just to reflect on a couple of things you said, certainly protecting the consumer and having him in the loop. The whole transformation, they say we're in the fourth digital transformation since 2000, right? Starting with the .com, and now we're on the fourth one. There's a necessary change management process, no matter, even though companies hate change management, it has to be part of the equation to get to more autonomous lending from that perspective using AI. And one of the ways I think, so risk in of itself dictates policy and regulation. And when we put that in the context of the, maybe say, credit and asset-backed finance that buys all the loans, they really are the ones that decide what they want to buy, right? One of the gaps I see,
and use technology to tailor their processes, consumer facing.
One of the gaps I see is you have 8 to 10 companies from originator all the way to that player that buys the loans, and they're all on different platforms. None of the data is standardized or normalized. There's a lot of sometimes human error and sometimes the way that the portfolios get packaged. I think there's an opportunity for a big transparency of quality data in that from originator all the way through. That ultimately can hopefully maybe bring pricing risk down for consumers and also more comfort to those end buyers that buy the loan. So that's interested in that a lot. And so,
I think that MBA and our affiliate Nismo is playing an important role in that standardization space. In terms of the technologies and how that can be utilized to a greater degree. The industry becomes more uniform in the application of that standardization. So doing some interesting work in that space, and we'll make sure that that's all harmonized with whatever policy work that we have to do that'll be in front of us.
And a shout out to Brian View over there as well.
We're excited to have Brian on board now at the helm of Bismo, and he's at the senior management table with MBA, hand in glove with all of us.
A lot of integrity at the table, a lot of great, knowledgeable people. yourself and all the team involved with that. So I'm looking forward to seeing how that unfolds, and happy to help however my little self can in that whole tech world. So last question. This one's more for just, I like to bring out the creative side. There are so many creative entrepreneurs in this business, mortgage companies, building tech, legislative, all levels. And when I met Bill, I was so impressed with some of hidden talents that he's told me he's a singer. He used to sing in a band. I think.
I'm a frustrated tenor. Yeah, I sing in some big choirs and occasionally with a band too.
That's awesome. So we may have some musical things a little later that we might release. That's reason for the guitar. But that being said,
I like Elvis at Christmas time. So you talked about doing Blue Christmas.
Some of your influences real quick, and then I'll ask our final question.
Well, I was fortunate enough that my parents had me involved in athletics and used to say that we're not taking you to ball practice if you don't do your piano practice. So I took like years of piano, and then I just have sung almost more later in life, less in high school and more kind of post-college. And I've been fortunate to sing in some large choirs, including some Washington, some that have recorded some stuff. So I like all music. And I think, my earlier point about how lobbying and work in the policy space is more of an art than a science. I think intangibles that go along with kind of artistic endeavors, like you playing the guitar. And by the way, he swings a mean axe. Heard of it at some of our receptions.
Thank you for that.
You relate to people, it's through song or whether it's the interpersonal work that goes along with trying to advance a policy agenda. So much of that is intangible, and you want to make friends before you need them. You're not at the table, you're likely on the menu. So you have to approach these things the right way. But the good fortune at MBA of being a great think tank in the mortgage real estate finance research space, and we've got well-grounded arguments that we utilize after we build the relationships. And that's what's so exciting about my job, is that my team and I, both Democrats and Republicans, work in the House and the Senate on Capitol Hill to take those arguments and be the connective tissue to get to the right people in the Congress, but also at senior levels in the administration to advance the arguments, whether it's on the GSEs, whether it's on credit scores, whether it's on trigger leads, whether it's on VA loss mitigation issues, it's on tax policy. And trigger leads, VA loss mitigation, and tax are all big victories for us earlier this year, but they were years in the making. So I think there's a connection between kind of fascination with artistic and how you apply that kind of the everyday work that we do.
Yeah, certainly have some talent, Bill. Obviously, you're doing a great job for the MBA and the industry. I love what you said, too. It's a good theme. We're at the holidays time, and you're working together with Republicans and Democrats to solve a common ground issue. And that's, all Americans, we should work together more. And I think that's a common theme that many of us would like to see. I certainly would. You're doing a good job of leading.
That was the common theme, being a bipartisan issue in 1985 when I came to D.C. for the first time. Information is exchanged a lot differently now. Look at the way that we're communicating through this medium and more rapidly. And we're in a toxic time, but I've got to compartmentalize and still find a way to hit the pocketbook issues. And there's no more important pocketbook issue than housing. So we have to work with both sides. And look, the majorities in the Congress are so small that Republicans are in the majority now. They could lose the House. Democrats might have a slim majority. We've got to work with people from both sides of the aisle, and we do that on a regular basis. And the same thing would be true in the Senate. And in 4 years, we'll have another presidential election, and it has consequences, and we're seeing that. A big change, rapid change to this Trump 2.0 administration from the Biden administration, or what a Harris administration would have done in carrying forward a lot of the Biden policies. And fortunately, it's positioned for us to argue on behalf of the industry and educate in a well-founded way.
Yeah. Well, Bill, thank you for your valiant work in that.
Yeah.
Last thing, we have the opportunity to ever play live at any show. I might come and ask you to sing with.
Yeah, let's get that worked out.
People would love to hear that.
Yeah. Ride with a critic, so don't have a blue.
See, no rehearsal necessary. That was right off the cuff.
Well, we need to give them some proof of concept here that I could sing. So
that was amazing.
Yeah. All right, man.
Thank you so much.
Thanks. Appreciate it. Same to you.